Find out what you're. I mean, so many earnings today, Bob.
Right.
We're not even able to get to all of them in the last hour and 30 minutes.
I'll make it simple for you. Strong earnings beats almost across the board. Some stocks a little overpriced. They're down, surprisingly, like Caterpillar. It's a little bit of a problem there. But overall, they're not only not lowering the second half earnings estimates, which is what everyone's afraid about. Some of them are raising the numbers. I want to show them to you. But let me show you the sectors here and what we got here. Communication services have been great because Meta's been strong. Comcast has been strong, our parent company. Banks, First Republic has stabilized, is up 10%, and you get the Comerica's and Zions up 2 or 3%. Consumer discretionary has been great because Hasbro had great numbers, eBay had great numbers, Amazon had great numbers. Healthcare is just kind of mixed there. We got Lilly good, Merck good. AbbVie is a little bit of a problem. That was a disappointment, but one of the few disappointments. Semiconductors have been really on a downslide in the last few days. We should talk about that a little bit later. I just want to show you some of these companies that have raised guidance. I don't mean just beating estimates. I mean raised guidance. Meta, of course, we know there's a high. Lilly's got a new high right now, up 2%. They had good numbers. Merck had good numbers. They beat and they raised their full year outlook. Honeywell raised their full year. Q2 guidance was in line, but that was raised. eBay, second quarter guidance raised on revenue, so that was good. Roku had good numbers too. So all of these companies actually raised their full year guidance. There are a couple of downside leaders that are concerned about. I want to just show you, I don't know what's going on with the material names, but Freeport's been on a downtrend. It was 43, 6, 7, 8 days ago. Remember, the earnings were Friday, as I recall, but they were trending down before that. So Mosaic and material names generally are sliding. Some issues about how strong the China reopening is going. And look at Mobileye. Here is the whole game, the big EV electric war that's going on. That was the price war that was started by Tesla. They lowered their numbers today, specifically citing China there. So there's a knock-on effect from Tesla's price war. So where are we on the first quarter earnings? Let's call it pretty good so far. There's 234 companies. Look at this. Today was a huge day. We're just about halfway in the earnings season. 80% are beating. That's about average. Here's an important number. 6.7% is the average beat. Now, prior to COVID, a typical beat on the S&P 500 was 3 to 6%. So I'd actually say this is above average pre-COVID. More companies are beating by slightly larger than the historic average here. Only 32% have raised the estimates. That's kind of surprising, but that doesn't include today's numbers because the conference calls are still going on. I think they're going to raise that overall. So where are we? Here's the bottom line. The bottom line is generally beating pretty well, more than expected, and they are not lowering the estimates for the remaining quarters. So 2022, the number was 218. I'm just putting up numbers here. These are dollar numbers for the S&P 500. The estimate today, $219. That's so basically break even for 2023 versus 2022. And it's about the same as it was when we started earnings season several weeks ago. So not lowering estimates. Remember, the bears are expecting an earnings apocalypse that has not materialized. Even last year, the S&P dropped 25%, but earnings did not crater. In an earnings, real serious recession, earnings go down 10 to 25%. Not
there, and we're roughly halfway through for the S&P market cap at this point, right? Reporting.
Yeah, we're down 4.5%, somewhere along there. But for the first quarter, if third and fourth quarter estimates are historic highs, they're not cutting. So we're waiting. The bears are waiting for them to come in and start cutting, saying, "Oh, the companies are giving us very bad body language." And so far, halfway through, we keep looking out. Are they going to say things are cratering? None of them are, and that's why the market keeps holding up, and we're in this trading range. It's hard to push it forward. We're trading at 18 times forward earnings. That's not a recession multiple. That's a growth multiple. So the market's priced for the soft landing. There it is. It's in front of you, but nobody wants to believe it. That's what I love about this. Everybody is skeptical. Everyone thinks the numbers are wrong. And that's why the market keeps holding in there, because people are standing on the sideline with cash.
Because I almost think it's more important what the Fed does or does not do than what happens with earnings and what's happening with the economy.
It is entirely, and if they're wrong, if the Fed keeps the rates higher and goes high into 2024, the market, those numbers are in trouble.
Yeah.
Interesting picture shaping up, Bob. Thanks,
Yeah, okay.
Bob Pisani. Meantime, Meta.